Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor of FinTech Futures, and for this episode we're joined by Colin Fyfe, CEO of Unity Trust Bank. Colin, welcome to the show.
Thank you for having me.
Excellent, it's great to have you here. And just to get started, would you like to quickly let us know a bit more about yourself and Unity then?
Yes, so Colin, and you can tell by my accent, I hail from north of the border, but haven't lived there for 27 years now. Career banker, worked my way through various roles in various organisations. Took my first chief executive position in 2014, and in my third position now at Unity, I started in January 2024. So 18 months in, thoroughly enjoying Unity Trust Bank, and I'll tell you a little bit more about that in due course.
Excellent. Well, sounds great. We're looking forward to it. And again, great to have you here. And thanks so much for taking the time out to speak with us today. So, on the show this week, we'll be exploring the current state of play of the UK business banking sector and how Unity Trust Bank has approached its ethical banking strategy to support not for profit and smaller profit purpose businesses in the country to help make a positive difference in the communities in which the bank operates. We'll dive into how the bank's actions contribute to and deliver a range of positive social, economic, and environmental impacts across the UK, how the bank has approached its tech and innovation strategy to keep up with shifting customer demands and the emergence of new technologies, the key things businesses want from their banks in the current climate, and of course, Unity Trust Bank's plans for future growth amid increasing competition in the business banking sector. So, to start off with, then, Colin, I mean, macroeconomic conditions remain quite tough for businesses in the UK. What's your take on the current business banking landscape at the moment, then, in general?
Well, there's been an increase in the number of business bank players, some new entrants coming in, which in theory should help competition. But I think the biggest impact in recent times has been that the larger players, typically the high street banks, have decided to move upwards into larger organisations, and I'm probably larger organisations where their income opportunities, their profitability from that relationship with the customer is higher. It's been a it's been a period of centralisation. There are less relationship managers in the local communities. There is more technology to help with the convenience of banking, but it has left some SMEs and sometimes larger than SMEs are a little neglected, where they don't know who their banker, their relationship manager is. If they need some support, they don't have that route easily available to them. And it's left them to the mercy of perhaps at times making some wrong decisions in terms of how to fund or the advice that they need for running their business. And unfortunately, that has affected many organisations up and down the country. It's uh, it's why we are so wedded to a relationship management model. It's important to understand business, what's happening in their sector, what's happening in their business, what makes them tick. And once you know that, you can offer some really good support. It is a higher cost model, and certainly theoretical, because you have more human involvement, but we feel that is exactly the right way to be, and that's how we intend to continue.
Excellent. And yeah, I mean, you say at Unity is where you provide ethical banking for businesses. Can you tell us a little bit more about what that entails and your approach there to not only ethical but sustainable banking as well?
Yeah, well, I'll take you back a little bit just to give the context, because it's not the story of Unity Trust Bank is not always particularly well known, but it goes back to 1984, and that's the year that Unity was formed by a group of trade unions. Now, the trade unions have a lot of banking needs, didn't feel that they were being served terribly well, and therefore decided, let's set up our own bank. And Thankfully, they decided they didn't want it to be just like any other bank. They wanted it to be a bank that provided a service to help the customer flourish, but also a bank that was focused on positive social impact, or as it was known in the time, doing good in local communities. So if you have that as part of your purpose, if it is included in your articles of association, basically the rules of the company, that's what you're mandated to do. You're mandated to make sure that you fulfill that original purpose from 84. And 41 years later, that purpose is as strong, if not stronger, than it was then. It means that we are looking for depositors who want a good return on their money, and they want to know that their money is being put to good use to help local communities. We take that money and we lend it out, typically in a variety of different sectors who need the support to grow their services: healthcare, charitable services, education, social housing, environmental, social organisations. There are many businesses who are actually adding a lot of good value locally. So that's what we do. So therefore, if you are working with Unity, you would be focused on more than just the risk and the return. You'd be focused on the risk, return, and the impact. And all three of those have got to be very tangible. They've got to be right for Unity. And at that point, we will provide the support. So we don't just say it, we measure, we monitor, we track that impact. We have to demonstrate that what the customer said they were going to do gets done and the impact turns up. Whether it's an increase in the number of beds, an increase in the number of appointments, an increase in the number of CO2 emissions that are saved, whatever it may be, we track it and we measure it against the United Nations Sustainable Development Goals. Typically, therefore, we're dealing with good businesses and good people, and it becomes really enjoyable.
Sounds great. And Unity publishes an impact report as well each year, detailing your activities and how your actions contribute to and deliver impacts in different areas. What were the key takeaways from your latest report there?
Yeah, the key takeaways would be that certainly last year, more than 50% of our lending went into areas of deprivation in the UK. So therefore, from some of the sectors that I described, you can probably understand that, social housing, other forms of healthcare support. But also, it's important, an area of deprivation, the business world might be facing a few closures, a few job redundancies, and therefore, if we can support businesses to grow and flourish in that environment, it will help with some of those jobs figures and help with the whole spirit in the local community. So I would say that was probably one of the key factors. Also, increasingly, we are supporting environmental needs. A lot of organisations are thinking about their own carbon footprint. How do they address that? Are there benefits in the energy efficiency that they provide? So therefore, we've been very focused on that and been lending more and more money to organisations, and the social housing sector has been very quick off the mark. So supporting businesses to do the retrofitting and then to get the benefit from the work that has been done on those properties. So we are becoming more and more focused on what does society need, and environmental is one. And we issued some local climate bonds for the first time earlier this year in 2025, basically giving local councils the chance to take some monies from us and invest it in opportunities to improve the energy efficiency and the environmental footprint in their local area. So I would imagine that will be an area that will grow within our impact report.
Excellent. And you've touched on a few things already. But I mean, do you think the wider banking industry does enough to support not-for-profit businesses, maybe smaller businesses, and what should the industry be doing more of in general?
I'm afraid my answer to that is no. I don't think our industry is doing enough. I think that let's talk about charities or membership organisations, and it probably takes us back to our union heritage, where you have got perhaps volunteers who are running the bank accounts on behalf of the overall organisation. And therefore, the turnover in turnover in volunteers can be quite high. The operator of the account may need some additional support to understand the facilities available to them. And that takes time. And time costs money. And I'm afraid certain banks in our sector, that will not be their focus. That will not be in their purpose as an organisation. So I'm very clear that we're an organisation that is both human and digital. So the choice is there. When a human service is needed, is preferred, we have those human individuals there to provide that service. When a digital service provides more convenience, we can provide that as well. And I think we will retain that balance for as long as that is needed. And your question about small to medium-sized businesses, I just think they have been neglected, unfortunately. I grew up in a family business in Scotland. The family business was funeral undertaking. And my father used to meet with the local bank manager, and they would discuss whether he should buy a new hearse, whether he should buy some more limousines. And he would leave that meeting thinking, right, I'll bounce that off somebody else. Unfortunately, the small, medium-sized business owner doesn't have that luxury of somebody to talk to. So, we aim to provide that service through our relationship managers.
I mean, you've touched on the digital side of things there. I mean, given the rapid rate of technological change that we're seeing at the moment, how have you at Unity approached your tech and innovation strategy to keep on top of new developments and incorporate that into your products and services?
Yeah, so the way we've approached it is that we created, at that time, a customer insight team and a customer experience team. We don't want to build it from what we think is right. We've built it from what the customer needs. And that takes time because you've got different customers with different aims and objectives that they want to achieve. And so the user experience has been at the forefront with a human approach and digital for when convenient. We built our own integration layer in our tech stack. We thought that was, in terms of getting the balance between what do you develop and what do you buy, we thought that was the right balance to strike so that we could be clear on what do we have that we can then plug other external services into. So we've maintained that, the integration layer with our internet banking, which is the main services that our customers interact with. They are fully developed by us, but we don't intend to develop everything. We don't have the expertise to do that. So therefore, integrating with the many and increasing digital and fintech services is really important to us. Getting the order right is sometimes the challenge. So that's why we've done a little bit of a sort of fabric first approach. So the integration layer, the internet banking, we're just in the last few days before we roll out a new network at Unity. We've spent a lot of time creating the network between our offices. Our disaster recovery has changed dramatically. We've modernised all our kit. We've upped our cyber approach quite significantly. And that gives us a better chance of deciding when is the right time to automate because it's convenient and when is the right time to retain the human service, which will be provided in a much more sustainable way rather than the network which continues to drop out and, that not the experience that MD's looking for. So some important partnerships that we've created as part of that. I think it's impossible for any business to go alone. Where do you take your advice from on your architecture? Where do you take your partnerships and how far do you take them before you explore other avenues? I guess that's all been in play, but now that most of the fabric is done, most of the integration is done, I'm quite excited about what else can we plug into. The world's moving at such a speed that when we started this part of our strategy, there would be many a piece of technology that didn't exist then. So it is, I guess, there's an ongoing excitement about what's next, but you need to get it in the right order, and it's quite easy to get carried away with yourself when you think about it. Naturally, it's got to be step by step.
Sounds great. And Unity's lending to businesses has remained strong in a period of global economic instability, with 137 million in lending committed last year. How is it that you've been able to continue confidently lending in the current climate then?
So we are focused in the UK. Our typical customer has got limited exports to other markets, and they are typically not startup businesses. So there's a level of maturity in those businesses. They've probably survived some form of conditions in recent times, COVID, Brexit, probably as a minimum, and therefore, when we start a relationship with them, they've got something they can demonstrate. So that's been important. We also, many of our sectors are resilient. So regardless of global trade challenges, we have an aging population with a growing healthcare need, or education that never finishes, or social housing that needs to be brought into the 21st century. So our sectors have been very good for us. We tend not to go into speculative situations. The more speculative you are, the higher the interest that you probably will charge, and the more defaults you'll have, which limit the ability to support those strong grassroots businesses. So that's been probably the main parts. So don't have shareholders who are pushing us to squeeze out every single penny of profit. And having been in financial services for more than 40 years, when you have that squeeze and you're running the organization only for profit, that's when you make mistakes. That's when you lend in situations where you're not going to get your money back. And I'm grateful that we have these conditions to work with it.
Excellent. Yeah. And in your latest financial results, you saw an increase in profit alongside an increase in customer deposits as well. What would you put that success down to, and how are things looking so far in 2025?
I would say loyalty is one of the key factors. The bank needs funding to be able to lend, and in our case, lend into those local communities to make a difference. Our depositors are particularly loyal because they know that they can get a good return on their money. They know their money's safe because we've got a very strong financial position. And on top of that, they know the money has been put to good use. We can track it back using our impact report and tell them where did it go, what did it do, what was the impact it made. And I guess in an age where the consumer, the business owner, all parts of society are much more in tune with what happens to their money, it's really important. We were involved in a process where a group of universities came together. Their students were asking them, where do our fees go? Who holds them? Who makes the payments? And when they found out that they were being held at times by banks who were supporting, for example, fossil fuels, they wanted change. So a group of red brick universities got together and did an exercise to find out who would they put on their shortlist of banks and building societies that they thought they could trust. We're the only bank that's currently on that list. That group of universities said, yeah, their purpose, their use of the funds is true. So that, I think, has been our biggest success factor. And the good news is we're going to continue.
Excellent. Sounds great. And I guess, building on that, what's next for Unity in terms of your growth plans then? Is there anything else in the pipeline you can tell us about now?
Yeah, we're going to continue as we have been. We have got the clarity that if we keep doing what we're doing and deliver what we say we're going to do, that in a short number of words can be a very powerful strategy. So we're going to continue in the same path. Our staff have grown significantly. We will be about 300 staff by the end of this year. It's not long ago we were about 100, 4 years. Our capital has grown, the sort of equity in the business has grown fivefold over the last 10 years. So we don't feel the need to change. We do feel the need to reach out to more geographical locations and make sure they understand what Unity can offer. We feel the need to reach out to other sectors where they perhaps are not utilising our banking with Unity. And we tend to keep the sectors linked in some way. So a good example, last year, we were going through all the areas of healthcare. We'd started to get more focused on the different care levels. So, for example, I visited one of our customers who had worked in the NHS, had run a programme in the NHS and felt there was a missing step at the end. It was all about rehabilitation, and that rehabilitation wasn't strong enough or long enough. So they left the NHS and we funded them to put that final piece in place. So we've been looking around for different parts that need to be strengthened. And for example, we were solely focused on human health. And last year we moved into animal health, which was a quite an easy step because we knew a lot of the government support and the way the industry worked, from dentistry, pharmacy, care, etc. So I see us just expanding geographically, expanding our focus on sectors, and beating the drum a little bit louder, because every year as we get stronger and stronger, we've got more confidence to say to businesses, you should be banking with Unity.
Sounds great. And, good luck with that as well going forward. And thanks again, Colin, for chatting with us today. To close out the podcast, we have our now infamous FinTech Jail. So this is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
So my selection would be digital roadmap. Now, I sort of cringe a little bit at that, and it might be a bit about my age, but as somebody who grew up with the atlas in their hand and the roadmap in their hand, trying to navigate their way through Glasgow or Edinburgh, and we now view it as the digital roadmap, and we use it at Unity about digital roadmap, but it feels just at odds for me. It feels as if it's a bit of old world, new world, and I think people take all sorts of views of, well, what exactly is that roadmap, and for me, it's just a series of steps. You know, where is the investment coming from? What can people look forward to in terms of the features? So I cringe a little bit when I hear digital roadmap, but to be honest, I cringed at quite a few of the names on the list when I read them as well.
It's very true. Yeah. I completely understand about digital roadmap as well. I mean, I guess you touched on it earlier as well with how quickly the space is evolving these days as well. Surely a roadmap would very quickly get outdated as well. And I mean, with digital transformation now, do you feel like that should just be a constant within banks now, just happening all the time across teams?
Yeah, it is. It is absolutely. I don't particularly think that digital transformation is well understood within businesses. So, probably the same could be said for many buzzwords. When they're used quite glibly, people don't have a clear picture of what does that mean. So we try and use language about what's in it for the customer and what's in it for the member of staff. How do we make lives easier? And in today's more complex world, I don't think that's ever been more important. So yeah, I would like to see digital roadmap and transformation starting to drift off into the sunset, and for us to be a little clearer on, well, what will that deliver, and where's the value in it?
Excellent. Yeah, well, that sounds good to me. I'm more than happy to add digital roadmap to the jail this week, and we'll see later down the line if anybody wants to come back on the show again and break that back out. But for now, Colin, thank you so much again for joining us for the podcast today. It's been a pleasure.
Thank you.
Well, that's all we have time for this week. Thanks, of course, to Colin for joining me. As for FinTech Futures, you can find us online at fintechfutures.com, and be sure to follow us on LinkedIn to keep up with the latest fintech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favourite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. And as always, thank you very much for your support. We'll see you soon for another episode of What the FinTech. But until then, goodbye.